At this point, we will move to our first theme presentation, for which I would like to invite Mr. Prashant Agarwal, co-founder and partner, Wazir Advisors, to the stage. I'm delighted to introduce Mr. Prashant Agarwal, having an extensive experience of over 28 years in various corporate strategy, business creation, diversification, and performance in the field of textile, apparel, and retail sector for Indian as well as international clients. Mr. Prashant has worked in the manufacturing, sourcing, and marketing departments of leading textile and apparel companies. He has been a speaker at various national and international and apparel conferences. He has also served as guest faculty at IIT Delhi, IIM Ahmedabad, and been on board of some of the most successful textile parks in India. He is a textile graduate from the Technical Institute of Textile and Sciences, Bhiwani, and MBA from IMS Indore. Mr. Agarwal is an expert in understanding global market dynamics and helping companies strategize for the future. His presentation today is titled Global Dynamics Shaping the Industry. Please join me in welcoming him. We will hear from you, sir.
Good morning, all the honored guests present over here. OJTC conference, we have been partner for all these 19 years we were together, sir. So, and I think whenever we design a theme for OJTC, because all the owners, the team, their team are involved in discussions, we always feel like something different should be done. And as we talked about threads of partnership, threads of how do you weave together things which are already there in India. That's why we kept the theme the way it is. And I think Gautam Nayaji, you have put it absolutely aptly on the theme. Today, I think to start with this presentation, I will talk about global dynamics shaping the industry. Because today, industry is changing from geopolitical angle, the way buying dynamics are changing, the way the inventory levels. It's first time in last 2 years we have seen the dip in terms of trade which has happened, and it has never been so long. But today, now things are changing. So I thought let's put all the research first in perspective so that you get the numbers, the data in terms of how global dynamics are changing, what are the impacts. So my presentation will have 4 components here. First, we'll talk about global apparel market overview. Then we'll talk about trends impacting the industry. And then focus areas for Indian industry, what Indian industry should do. And then finally, learning from some leaders, some case studies of how global leaders are moving. So this is how the whole presentation will be divided. Let's talk about first who are the out of $1.7 trillion today, with Gautam Nayaji talked about $2.3 trillion market by 2030. When we talk about 1.7 trillion market, it's the market price at the sales level. Garments which are sold from the retail stores. The trade is different. This is garments sold at the retail level. So 1.7 trillion is the market today, and top 3 markets constitute almost 45% of the trade. And top 3 USA $289 billion, Europe $267 billion, China $181 billion. While others, India is almost $102 billion, UK 79, Japan 61. So while I think one important aspect for India is always that India has a much bigger domestic market than our export potential that we see. And that's why, but I always say that Indian domestic market will keep growing at a larger pace, and they will keep growing from 102 to maybe global targets that we have set for future next 7 to 8 years of $250 billion. This market will reach there. But the issue is, if we are not focused on export is really important. Because if you are focused on export, you become a very competitive country for manufacturing. You know what's happening globally. You know what kind of new products are being developed, because Indian consumer will also ask for those same products because they travel everywhere. So you can't say that, oh, we don't make this. if you don't make it, somebody will import and supply to Indian consumer. Because Indian consumer is also as aspirational as international consumer. So I think it's very important, whatever Indian market grows, that we really focus on exports to remain competitive. So I think if we talk about these three important markets, and I'll take this further forward, what happened in these three markets in first H1 of 2024. The USA, the retail sales, because these data are all documented. USA retail sales are up by 2%. Europe, it's down by 6%. China is down by 1%. So these three markets, which are the biggest market, which really impact the overall trade, the US, the biggest one, is up by 2%. Now, this number we could see because overall in 2023, the export, the global trade if you talk about global trade or only apparel, from 540 billion it has moved to 508 billion dollar. Means 32 billion dollar reduction in exports, the trade, which has happened in 2023. So what we see the impact that we had less orders last year, those impact could be seen through reduction in trade. But very important part is that the sales has not gone too low. US is up, Europe is down by 6. So I think now I think the next slide, which is very important for us, we will always ask questions. If the sales is not going so down, why businesses are getting impacted, which got impacted in last 2 years. If you see this slide, I was in ITMF conference in Uzbekistan 2 days back, and Lenzing did a complete research of 166 global brands. The real research is what has been their inventory levels in last 3 years. So if you see the dark green shows inventory level is below 0%. Light green shows it is 0 to 10%. The yellow part shows 11 to 20% inventory levels. The orange shows 21 to 30% inventory levels. And the brownish, the colors may be different. The brownish part shows more than 30% inventory levels. Now you have, if you see in this, the research done, how it has changed from 21 to 23 to first quarter of 24. If you see in 21, the inventory levels were below 0% kind of, the greens, quarter 1, 21. And by the end of quarter 21, the inventory levels started moving towards 10 to 20% and 0 to 10%. And in H2 2021, inventory levels started to rise when the players built up inventories as a precaution. In 2022, brands' inventory increased in anticipation of demand recovery and supply chain issues. Upstream inventories partially emptied towards year end. So this was the year, 2022 was the year where people built up huge inventories. See all these oranges, yellow, green, where we could see that inventory built up, and we could see the kind of orders which were coming. The spinners were making profits, the fabric players were making profits, the garment players made huge profit. It was huge inventory built up which happened during 22. The sales was also high, but inventory built up in anticipation was much higher than the sales. So this is what happened in 2022. Now let's see what happened in 23. Inventories across fell significantly, with brands and retailers inventory dropping to fourth consecutive quarter of quarter 4 23, approaching pre-COVID levels. So if you see the last part, quarter 4 23, it's all becoming green, either 0 to 10% or less than 0%. This is how inventory levels went down end of quarter 23. If you talk about quarter 24, everything is green. So all fiber, yarn fabrics, garments, brands, all 4 areas, all are green in quarter 1 24, means inventory levels have really gone down. So this shows that the trade, one is the sales, which is not deeply impacted, but people were skeptical, logistics was taking too much of time because of geopolitical changes. The travel time increased so much. And then people were initially in 22 they built huge inventory. In 23 it came down and now we are reached to almost pre-COVID levels. So I think the positive point from this slide is that today, actually, most of the exporters are also getting good orders today. If you are an organized big setter, you are getting good orders. They are full for a few months. So I think the time has come for us. It's not that it's going to go dip further. The time has really come for all the exporters to be prepared to get more orders, to set up factories, to expand businesses, to see the supply chain, what we'll talk about in future. Because this research, I was searching for this research because while all of you talking to different brands experience this in and out, but I wanted to have data. It's 166 brands, actual data being collated here. So 166 brands globally, actual data being collated here. So I think this actual numbers really talk about what's happening globally, and you could see in the numbers in 2023 from 910 billion the trade went down to 850, and that's what I just talked about. In 2022 garment exports was $540 billion and it moved to $508 billion, almost $32 billion drop in 23. This drop which happened will come back to 900 plus now. So the opportunity is there. And like this question is asked always when we talk about what's the globe changes happening globally. So I thought first let me go through and try and answer through numbers and explain the things how it's going to happen. The number went down in 23, it's going to go up in 24. I am not saying every month is going to grow, but it's not going to come back to 2023 levels anymore. So it's going to be a better part that we are going to see. Now, when we see first, I think in first few slides we have clearly established that how trade has moved, how market has moved, and how inventory has moved. But now this slide clearly shows how the supplier nations have shifted significantly. So China, which has always been, we talk about China plus one, who took advantage is different. We always talk about China plus one. So if you see there I have presented for US, Europe and Japan. In US, Chinese share has gone from 30% to 22%. Huge drop. And if you see who are the winners? Vietnam. From 16% to 18%, from Bangladesh 7% to 9%, and then India. In all three graphs, India remains consistent. So it's like we are hovering same. That's why we could see in our exports hovering $15-16 billion in last almost, now it's almost a decade. I am seeing it from last 2016-17. We are hovering at the same 5%, same almost same kind of share. So while Chinese have come down, and if you see in Europe also, the China has gone down from 31% to 27%. The drop is not so significant as that is in US. And again, Vietnam, Bangladesh, both are the gainers here. Similarly, in Japan, China has moved from 54% to 48%. Vietnam has gone up from 15 to 17%. So I think all these trade shifts, what we were talking about, Gautamji also talked in the morning, China actually has lost ground, and countries like Vietnam, Bangladesh, Cambodia, they have gained ground, but are they finding more options? Because that's the key part. And I was discussing Setiji in the morning, because while in Bangladesh also it happened, everybody, all newspapers, everybody talked about that there will be a huge shift. Yes, buyer wants to shift, but where? How? Are they going to go back to China? What Gautamji pointed out in morning, that China is again increasing exports, because ultimately when they want to shift, they have to see as competitive country as from where they were buying. So if they want to shift from Bangladesh, and definitely I think Bangladesh orders are not going to come to NCR, because these are bigger factories with larger runs. So you have to set up factories elsewhere in Odisha, in Madhya Pradesh, taking larger factories and then shift there. So if India has to take advantage of this, the strategy has to be different for different regions. We can't say it's same for everyone. Bangladesh orders won't shift to NCR regions. That's for sure, because the cost is different, the quantum is different, so everything is different. So I think I have just extrapolated and tried to really analyze that where the shift is happening. Now, again, some numbers in terms of last 20 years, who are the winners, and last 5 years. We have tabulated in terms of 20 and 5 years of winners and losers. If you see last 20 years, Bangladesh has moved from $4 billion to $51 billion. Vietnam from $3 billion to $35 billion. Cambodia from 1 to 14. India from 5 to 16. Turkey from 8 to 19. So this has been the shift. This was 20 years. If you see in 5 years, while we might talk Pakistan from 5 billion to 10 billion, Poland from 5 billion to 10 billion, but this the actual number added is 5 billion. But in last 5 years itself, Bangladesh moving from 35 to 51 is a 16 billion addition. So while it comes like in percentage term as the base grows, the percentage also reduces. It's like India's GDP growth versus US GDP growth. So as base is bigger, you can't have 7-8% growth there at a larger base. This is happening with China also. The base has increased so much, you can't have 8% growth in China and US. So similarly, but you know who are the winners. Pakistan, Poland, Bangladesh, Vietnam, Turkey, even country like Turkey, whose labor cost today is around $1,600. With the currency depreciation and all, earlier when we used to see it was $800, $900. Today's rate in Turkey is $1,600 labor rate. So still they are able to increase from 15 to, so I think I'll come to next slide and explain why this has increased. So if you talk about losers, Canada definitely, these are high cost countries. Taiwan from 1.9 to $0.4 billion. South Korea from 3.6 to $0.9 billion. Dominican Republic, Philippines. So all of these are the losers, and you know these countries. Today textile is one industry. It has moved on the basis of cost from one country, one continent to other continent, from US, Europe, Japan, China, Cambodia, Vietnam, Bangladesh, India. Africa could not take that advantage till now, where they don't have a, still it's a lot of struggling that that's happening there in Africa. But people, wherever there are cost effectiveness, business has moved. And you can see from winners and losers slide. And from winners and losers, I am coming to this slide because you will know that any country which is able to develop has certain, these are the factors which really actually you analyze, these are the factors which help a country grow in textile and apparel industry. And everybody creates their own niche. If China accepts competitive wage today, earlier they had, but today China has also almost $800, $900 is the wages in China. We talk about $150, $180 of hours being uncompetitive. China is $800 today, while Turkey is $1,600. These are actual wages I am talking about, talking to the factories, operating over there. So other than competitive wage cost, China is competitive in. So what are the factors we are considering here? Raw material, manpower, competitive wage cost, presence of entire value chain, economies of scale, product design and development. I think everybody has to find their niche in these areas. Once you have found a niche, and we will discuss in further sessions of how do we brand India, how do we promote India, I think it's important to really understand that how any country has grown. That's why I have shown this slide. India. So where India is losing on economies of scale and product development and design. So while we might say that in NCR we do a lot of embroidery, product development work, from here, when I see product development where 70% globally is synthetics, synthetic is growing not because as a polyester people love. It's just the kind of permutation combinations which they develop at a fabric stage. See, there are a lot of garment people sitting here, and I am a textile engineer also. Textile actually stops at fabrics. In garments, there is nothing to do with textiles. Garment is only industrial engineering. Somebody is telling you this is the fabric to use, this is the embellishment to use, this is the minimum cost per minute you have to sew the garment, and this is the process you have to follow. It's like any automobile. While it's not, people don't think in comparison. The moment I tell you, we start thinking that garment is not textiles. It's just the raw materials being taken from all over. and suddenly your efficiency is productivity, because garmenting is all about people and process focus. The moment you understand, and we'll buy fabric from there, fabric is a challenge, sourcing is a challenge, but garmenting has nothing to do with textiles. Buyer tells you what fabrics to use. So I think India, when we talk about product development design, I am talking actually fabrics, not to you people. If we are able to develop right kind of fabrics, if we have those kind of factories, I would tell you, if the feed is really good, you people will set up factories worldwide, and a country like India, unless until you have integrated supply chain, you will not get orders like Vietnam or Bangladesh. Vietnam, Bangladesh, they are lower in cost, they get orders irrespective of fabrics they have or not. India won't get those orders. Those orders will keep going to Bangladesh and fabric, where cost competitiveness of garmenting is needed. They come to India when you have fabrics, you have garments, you can do a lot of product development. So India has to create a niche. And I will talk about this again in my next panel, that from my speakers, that how India should brand ourselves. I think this is where India stands. Turkey, again, competitive base cost, I have already talked, $1,600. Then they don't have economies of scale. But they have created their niche. 4 days anywhere in Europe, you are there from Turkey. If you have 20,000 meters fabric order, it will be delivered 3,000 meters, 5,000 meters, 2,000 meters. Every day, whatever is made, it is shipped in a container. You don't wait for order to complete for 20,000 meters. This is how Turkey works. And if you see their designers think and work like French and Italians and those. You see, this is how they work. They have created the niche. And that's why, as a business, they are growing. They have grown in garment export from 15 to 19, and we are stuck. So ultimately, we in India has to really see what do we stand for, where do we stand. Are we comparing ourselves with Bangladesh or Turkey or whatever? See, Bangladesh, we say we can't compete because they are very cost competitive, their efficiencies are right. Turkey, we say we can't compete because they are very good in product development. So where do we stand? We really need to ask these questions to ourselves. And that's what I would like all the people, entrepreneurs who are there, my panelists who will come, to talk about it. Let's understand and then create a real focus for what India stands for, and then really work. Otherwise, they are in between. No, neither there, so buyer is also confused. Okay, some buyers know for what India stands for and they are coming, but do we want to remain there, or we don't need to go further? I think this is why I developed this slide. Bangladesh, except presence of complete value chain, they are product development design, they are still not good. So the synthetic orders are still not going to Bangladesh. They are like, we did a strategy with BGMA. How do you develop synthetic industry for Bangladesh in last 6 months? We just finished it. And they are going full hog, because for them it's a lifeline garment. So they are going after synthetic garments also. They initially buy fabrics from China, but they will slowly invest in fabrics also. Knitting is a big industry there. Knitted fabric is a big industry in Bangladesh. Pakistan, again, economy of scale, product development, but they have a huge advantage of complete integrated. If they are good in denim, so India make huge denim fabrics, but no denim garments, only for domestic. Well, Pakistan, you go, every mill who is into fabrics is into garment, and they give you end product as denim garments. So this is how Pakistani mills honestly are really, really good in the products that they do, because they are completely integrated. And then Vietnam, all of us know how they got advantage of TPP being signed while Trump removed it afterwards. But the year TPP was getting signed, they had $10 billion investments from Korea, Japan, Vietnam, China. $10 billion, and suddenly, once the investment has happened, all these companies who were investing are all established companies. So once TPP went away, they won't close the factories. So did really worked, and 10 billion converted to 20 billion, and you could see they are at 35 billion today. So this is what has changed in these countries. So I thought, let me put this slide to really explain point by point, and all of us as companies, as country, we have to see these factors and see where we are competitive and how we need to move. And now let me move to trends impacting the industry. So these are the 5 trends that we see by trends can be many, but these are the 5 broad trends. China plus one, strategic partnership for consolidation. So while I think all of us, we are sitting here, we might say that no, we can't invest in fabrics, we would like to invest in garments. When we say strategic partnerships or integrated setup, while ideal situation would be that you have yarn, fabrics, garments, but ultimately you have to also see that can I have a virtual partnership with fabric players? And I have worked with companies, no fabric business, but their partnership was like, just to give an example of Epic, I was there in Hong Kong for 4 days there, and in the mails which come from buyers, they know this fabric is they are going to buy from this Chinese mill. The merchandiser of the Chinese mill is marked on the mails which are communicated through buyers. Not that, oh, this fabric, this design is changed, this color is changed. You don't wait for orders. So this guy knows for this fabric order is going to come to me, and these are the changes which buyers are expecting. And this is a hard reality. This is what is happening on the ground level. The fabric supplier knows this order is going to come to him. Not that at the end of the order we'll negotiate who will pay 5 rupees more or 5 rupees less and who will be able to give delivery times. He knows he has to deliver. And no fabric facility for Epic Group till now. They are $500 million plus, zero fabric facility. But their facilities work like their own factory. You need to develop trust. It seems like it's not possible, but honestly, I am sharing with you what's happening globally, and it's happening. So we might not be able to do, but it's happening there. Free trade agreements, I'll explain a little more about it. I think all of us know these are very important part because of being a cost competitive sector. It's very important to be competitive through whatever way, whether it's subsidies, free trade agreements, incentives. So this industry needs everything. Sustainability and digitalization, we will talk further, and there will be sessions which will happen today. I think all of us know, don't need to explain. Sustainability and digitalization, there is no way out of it. You have to be there, it's like bread and butter. So today you might get away with it, might say that expenses are more, and that's what actually, and when I was talking at ITMF, I was talking about sustainability. I was talking to players and they said, we know that we have to invest in this segment. We don't go to buyers and say that cost is more. Yes, we have developed over a period of time that we get these kind of services we give to the buyers. Buyers gives us margins, and through these margins we keep investing. So ultimately money has to be invested from the margins, right? The only thing is it has to reinvest it in business, not in properties or real estate. So if you reinvest in the business, then definitely it has to come from margins. And all of these brands, they know, they never think about whether it's brand or whether it's brand paying for it. There is no discussion. Say, we have no options, we have to be there. While you know sustainability challenges will be there, you need to make a roadmap for next 10 years, 15 years, because there are technological changes which are happening, so many things, but need to have roadmap, need to keep investing. It's like no escape from this. Just to little bit detail further on the trends that we just talked about, buyers diversifying out of China, I have talked about these numbers earlier also. In this also, the 38% share, global trade share which buyers had, China had, has moved to 32% over years. And because when they had 38% share, the trade was $430 billion, today is $542 billion, more than $100 billion change. But China's share has gone down, and who has taken those shares? Bangladesh, Vietnam. So I think we have talked about it. We know rising manufacturing costs, tariffs, geopolitical concerns. So all of these are impacting China, but again, this is one industry, and maybe in other industries also. We know textiles more, so people are not finding alternatives. And China is still an enigma for a lot of people. How do you set up and don't bother about investment? Just to tell you, just as an example, ITMF conference, there was one company who had ordered for 1 million spindles. Now spindle is in surplus worldwide. They're saying every year you have to put up 1 million spindle we'll make 30s to 32 counts and 40s count, and anybody who has to buy 32 and 40, they will come to us because nobody will be able to offer cost and quality that we can offer. So I think, I don't know how they think, but I think they are there, so we have to see that how do we create our niche and get out of China right. So why I'm explaining this, because Turkey has done it, others even after being so high on cost. So these are the places where we can deliberate and really make a roadmap for company or country. We are not saying that we compete with China, we are not saying, but we have to create a niche. China is what, $300 billion worth of trade, $320 billion trade, and we are what, 37, 35, $320 billion trade. So, but Chinese companies are still going strong, and the only good part is they understand geopolitical changes more than us. They understand how the business is getting impacted. So all these, for example, you talk about Shenzhou International, they are almost 3.4 billion in textiles business, and Crystal Group almost 2.2 billion. So while they have been growing, they are growing beyond China. They are investing in Bangladesh, Vietnam. If this time economic survey also talked about, and I completely agree to it. Chinese are our best partners if they come to India and invest. They will tell us how to, right, at least anyway, they are the biggest trading partners, know how to create those businesses, how to market. So on a larger scale, they can be big. Now buyers sourcing strategy, I think I talked about earlier also, they are preferring vertical integrated setup. That's very, very important, because it's not only cost competitiveness for vertically integrated setup. They are seen when turmoil happens, those companies which are vertically integrated, they can keep supplying. Because the one is they can keep supplying, the other is product development aspects. In a vertically integrated company, just to give you an example of denim, a lot of product development happens at the fabric stage, right? And there are orders which don't come to anybody else. If you are not vertically integrated, you are still a Bangladeshi company or a Vietnam company, they will not give you orders if you are not vertically integrated. We'll go to Pakistan or Turkey who are vertically integrated. Because they know the kind of product development which happens in a vertically integrated company cannot happen in a garment company. So I think this becomes very important. Sourcing consolidation, we know. Ultimately, the orders are increasing, but number of players are reducing. Number of players are reducing manufacturers. And key apparel markets have multiple FTA that impact the global trade flow. I think I will not go in detail in this, but US, EU, Japan all have multiple trade agreements. India has also done that, and this trade actually works with where you have FTAs and the business grows. China has lost, Bangladesh has gained by 5%, Vietnam has gained by 3% share in last 10 years, just because they have FTA with Europe. Bangladesh has anything but arms treaty with Europe. So EU, UK, Japan, Vietnam, Bangladesh, they grew so much, people invested so much because of the trade treaties. And India has, with Japan, South Korea and Australia. And these are big markets, 32 billion Japan, Korea 14 and Australia 11. I think we need to target, it might take some years, but we need to target these markets, is very important part. So for us, last one or two slides for me, focus areas for Indian industry, we all know and we deliberate about it. Brand India awareness, we need to say that this is what India stands for. We need to brand India, we need to deliberate, and then, because when buyers source from a country, there can be individual companies which they can source, like they can go to Mauritius also to buy, but when they talk about countries like India, China, they know, and Bangladesh, they know they are competitive in this, like cotton synthetic is not known. So you need to really market yourself if you are in synthetic. So I think brand India awareness, manufacturing excellence, smart factories, virtual integration, partnerships, focus on sustainability. I think these are, I am not going into detail of all this because we'll be deliberating throughout the day on these, but can you really sustain without having smart factories, without having digitalization, without talking about manufacturing excellence, efficiencies, people focus. I don't think, I think the only difference I would say, we have to think beyond being a contract manufacturer for an exporter to having set up an industry where every department works. People, manufacturing excellence, technicalities, marketing, product development, HR. So all departments, there has to be separate department owned by separate people, integrated together, and everybody works continuously. It's not a one-time process that you hire somebody and it does it for 3 months and then you are there. I think all of these has to be integrated and expanded. And the last slide where we talk about TAL Group and Far Eastern Group. So globally, companies who have gone $1 billion plus, they have a global presence, they have a diversified portfolio, they have multi-country manufacturing, the level of integration, virtual or actual, is very high, value-added services, focus on MMF. I think all those countries which are $1 billion plus have all this, and I have n number of examples. I can quote n number of examples where those companies who have gone multi-billion are focusing on this. So I think manufacturing is the future. We need to know how to handle people and process. If we really focus on people and process beyond machines, and just for the sake of repetition, I am repeating, if we focus on this, India has a huge future in manufacturing, and that's where the investment, growth and value addition will be. Thank you.
Thank you, Mr. Agarwal, for insightful and thought-provoking presentation on global dynamics shaping the industry. You have truly illuminated the key trends that are driving change around the globe, perfectly aligning with our theme, Threads of Transformation. It will certainly guide us in the discussions we are going to do ahead.